Hi legends and welcome to my channel. To fight inflation, people need to lose jobs. Like, why? We are going to get into it. This affects both the stock market and also the crypto market, so it's important to understand why increasing inflation need to be fought with higher interest rates, and we are also looking at what interest rates actually are. Why is this affecting both markets? When there is inflation, and inflation it's usually normal in world economies, because if it's always deflation, that's just bad, okay? But when inflation starts going a little bit too high, this happens for a couple of reasons. Now, in our circumstances, we had an inflation going a lot higher because, of course, the cost of goods, the cost of purchasing stuff, transporting stuff, was quite problematic because of COVID, because of many other things. Anyway, inflation started rising, and also there were all stimulus packages. So like all governments, they were just giving money for free to people to support them during the COVID crisis, let's put it this way. All of this created the government printing money, which is exactly what crypto does not do usually. Printing money, so the full supply of currencies in circulation became bigger. Therefore, all your money became less important. It's like there are 21 million Bitcoin, and now all of a sudden there are like 50 million Bitcoin. So each one of your Bitcoin has portion of the security circle and a portion of the data transfer that you can have within the blockchain world. This would inflate because there would be now basically double the coins. So of course all the transactions would be double, and a lot of other stuff. Thank God Bitcoin cannot do that. It's done, it can't be done. But for fiat currencies, this happens, and happens so much during the years that this is normal. So sometimes the governments print money, or they just create money and they put them in their accounts. So this is considered as something that they can do, and it's fine. That's tricky. When this happens, the full amount of money becomes more. So there is more inflation happening because also of this. Then there are a lot of other details that I'll just not get into it. Let's just keep it simple. If the money are less important than they were yesterday, because now you need more money to get the same things that you were getting yesterday, a few things happen, among which the people start taking out their investments as well, because their value, now the real returns that we will have in years is going to be actually lower because the inflation is higher. So they need to diversify and maybe make different type of investments. Many people went, for example, buying houses, because that will adjust with inflation, or any other type of business that you can make. Or you can invest in companies, but then that's a catch, because companies will need to get some money as a loan. So now what does the government systems in the world usually do? They regulate it in one simple way. They say, hey, if interest rates are going to go higher and we keep rising them, this will make people lose jobs, and now we are going to look why, and this will fight inflation and will bring it back to a pace that is fine, like 2%, not 5, 6, 7 people losing jobs. And interest rates essentially are when you go to the bank, or you as a company, and remember this, go to the bank and then try to get a loan. And you're like, hey, listen, I would like to make this to create this new item to sell to customers, for example, or I would like to have more funds to actually open a non-fungible token marketplace, or whatever. So in this kind of case, the bank will say, yeah, sure, but you will give it back year over year in 10, 20 years, whatever, or less, for 2-3% more a year. Nothing, no? Yes, but this 3% compounds. Basically, it's a compound effect year over year, so you will need to, in the end, give back a lot more. Rising of 1%, 2%, 5% more makes it basically impossible for companies, the small ones, because Apple probably would get a loan anyway if that would really be needed, or they would find ways like issuing warrants and stuff like this. In this case, all the little companies and all the people that would like to get a loan to buy the car or whatever is not really an investment will not be able to do that. as a consequence of this, companies will struggle, the stock market will start trembling, and the crypto market probably as well, because imagine you just have maybe 10,000 in investments in the crypto world, and suddenly you need to pay your rent, and because maybe you just invested for fun. You probably will take out a little bit, and then maybe you will see the prices falling, and maybe suddenly you start needing that money, which I really hope that you don't do that, and then you take out, and then other people realize, and everything crashes essentially. That's how the system works. People will need to lose their jobs, and that's crazy. And the reason is, if company needs to hiring up the prices to adjust with inflation, and at some point there are no more people that can afford buying, then they will need to cut on cost. If you cut on cost, the first thing you do, it's like, do I really need all of these employees, or can I remove a couple? And maybe you remove 10% of your workforce as a big company. That means that 10% of people right now, they have no more jobs, so they have a lot less buying power when the inflation rose the prices maybe of 10-20% in the city supermarkets or something like this. So you will end up basically not having that little gap that you were putting in retirements, that you were saving for holidays, you name it. When all of this comes together, it then defines the fact that to decrease prices, to deflate the prices, then people will need to lose jobs because interest rates need to stay high. So people will not be able to afford to borrow money today to pay them back in the future very easily, and then probably banks are going to make it even harder for all the people because they need to make sure that they can pay so much more year over year. Are they gonna make it, or are they not gonna make it? If you want to buy a car, then probably you will not make it because you're not going to make more money out of it. It's probably going to cost you more money. If you're making an investment like a company, maybe you can make it, but first you need to make sure that you will make it out of this 5-7 years of struggling. They usually tend not to found new companies and stuff like this. When there are no more people that cannot afford that high prices, then of course all the companies, after reducing the cost and having back their margin, they will start reducing back the prices because of this economic calculation for which people can enter in any market. You can enter, if you are in a monopoly, for example, you can shoot the price that you want. But then you have other competitors, they will start stacking slowly to all different price ranges. So if you want to be competitive, you need to be at the very bottom of the price that you can sell for in that market. That means having lower margins. So everybody will need to try to get closer to that to be able to satisfy the customers, because if one person can buy some spaghetti for $10, maybe the other 9 cannot, so you are making $10. But if then suddenly you put the price down to like $5, and yeah, you are having a lot lower margin, way more than 50%. But then 6 people can buy it, then you made $30 essentially instead of 10. Of course with higher cost, but still your profit is going to be higher than say $8. It's going to be way higher anyway. So you're gonna do that, and that's how the economy will keep contracting back to a level that is sustainable year over year. Also because if you are investing in the crypto world like me, then okay, it can be very lucky year or it can be very sad year, because these assets are still very new, so they can really fluctuate of 10-20% in a day still. Maybe Bitcoin now a bit less, but it's still really crazy. Sometimes tokens explode and they do 20-50x, like it happened to me with Chile just after I bought it. Chile, all of these things can go really crazy, but usually the returns year over year, maybe Warren Buffett have been consistently having like 20% per year of its own returns, and that's already a lot when you put it all together with a basket of companies that you bought and they are working, some is not, maybe some is taking more years. All put together, your investment return maybe it's going to be 20% in a year if you are pretty good. Maybe it's going to be 7% if you put it in S&P 500 average returns per year over year. Sometimes you do 40% up, sometimes 20% down, sometimes you do like 5% up. In the end, more or less, it always works around the 7%. So that means that the inflation for you to leave it in an index should be 2-3% or something like this, because if then it goes to 8%, the money that you are putting today, even if you are getting with the risk the return of the 7% a year, and the inflation is like 8%, in that year you lost actually 1% of the value of your money, even if the numbers went higher. So be very careful about these cycles, because this really affects economy as a whole. That means that even crypto is not immune to this as well, because it's a cycle of economy. And now these blockchains are being identified slowly as companies, startup foundations, new technologies to be implemented in existing technologies and companies. They are being seen like this. Therefore, it's going to incorporate into the economy with just a new form of monetary policies. So be very careful, because when you see interest rates are rising or something, consider that maybe you want to take some profit right now. Maybe you can leave the rest in staking, like I like doing, but be very aware of this. When you hear interest rates are rising worldwide, start worrying. Okay? Thank you very much, Legend. I hope that this helped and it explained as basic as possible. And see you next video.